evening and welcome to the Australian Stock Market Show. We hope all of you who had a long weekend for the Queen's birthday enjoyed it, and we are here to prepare you for the week ahead. So now it's time to relax and settle down into another great show that we've lined up for you. In tonight's show, we'll cover many interesting stocks, including some great opportunities, and answer your questions as we bring you our upfront, no BS approach to all things stock market. Our main topic tonight is ASX tech stocks on the rise. Is now the time to buy? Hello, I'm Janine Cox, your host, and joining me tonight, of course, is Dale Gillham, and we're Australia's most trusted stock market educators. Hello, that was a mouthful.
It was a mouthful. Now, I'm going to get in first. You always ask me how I am and what I've been doing, but I'm going to ask you, how are you and what have you been doing?
Well, look, it was a relaxing weekend in Melbourne. Fortunately, the weather was good, as some Queenslanders watching might think that we always have crappy weather at this time of year, but it was actually quite nice. The sun was out and people were getting out and about trying to enjoy things. But I went to a park, a kids' park on the weekend to take the little one there, and I was so surprised to see so many people out. And I thought, we better take a bit of a wide berth from here. And we went to a place and there was hardly anyone there and had a free run of this whole area. So there are some advantages with COVID, I think. You know?
Well, there is. I mean, I'm always saying to people from interstate, when they go, it's cold in Melbourne, I go, that's exactly the way we like it. You're thinking that because it's not always cold. It was a beautiful day today.
Keeps everybody away.
Keeps everybody away. And Melbourne people watch grass grow, so it's fine. We'll go anywhere. We'll just watch it grow.
I don't know about you, but I don't like doing that.
Well, you don't like watching grass grow?
I don't sit still long enough to watch the grass grow.
Okay, we like to watch stocks grow. That's what we like to do, and let the market grow to grow really, really well. But I want to say, Janine, that I really appreciate you taking the time to be with us. I've just got my whole mouth.
Tied.
I know, my mouth's
all stuffed up. You really
appreciate
people.
I do. I appreciate people. That's what I was going to say. I really appreciate everybody watching and taking the time to watch us tonight. And if it's your first time, I'm sure you'll just find us just a little bit different than you probably expect as we share with you our years of experience so that you gain some valuable insights into the market, investing, and indeed trading.
Each week we receive many great emails, and we do have to edit a few of them down to focus on the questions asked. And as always, we give preference to those who support our channel and subscribe. So take a moment to click on that subscribe button now. Show your appreciation and support the team that's bringing you tonight's show. Moving on, it is the third Tuesday in the month, and this means we look at world markets, which I like. So let's get into the charts, shall we? Okay.
On your screen right now is a watch list showing I think it's the world major markets, or showing the markets, that watch list.
Yes, it is. And we've got the NASDAQ at the top of the board there. So this is the month we're looking at the moment. The NASDAQ 100 is actually up 3%. That's a nice little gain for the month there. The NASDAQ Composite's right behind 3.09, so pretty close there in matching with the 100. And the CAC 40 index up 2.62%. Europe's following quite closely behind, so we're seeing the European index 2.6% up as well for the month. The Australian All Ordinaries Index 2.3, we're not far behind there. The Aussies are pushing ahead. The S&P ASX 200 up 2.1. Now New Zealand's come back, so we're up about 2%, the New Zealand index, doing well there at the moment, which is great. And then we've got a mixture of Asian markets and European markets coming right down here to the S&P 500 index, up 1.2%. Indian markets up 1.2 at the moment, which is good. Go India. And then the Nikkei stock averaged 2.251% up for the month. Now looking at the other side of the board, so this is on the downside obviously at the moment, the Straits Times Industrial Index is down about 0.35% at the moment. The Dow Jones has taken a bit of a back seat, down 0.4% for the month. So a bit of a change of guards there, the guard happening there in the market when you see the Dow actually slowing down. So the defensive stocks are actually taking a bit of a breather this month. The Shanghai Composite Index down 0.7% and the Hang Seng down 1%. So Asian markets again down at the bottom. What do you think of that?
Yeah, I think it's interesting that both the Shanghai and the Hang Seng are both down together, because constantly we're saying one's going up and one's going down, yet they're both in China.
Yeah.
So how does that actually happen? But looking at the Dow down 0.39, whereas the NASDAQ comp is up. And it just shows you where the money is at the moment, or was in the last week or two. The tech stocks in the US took off.
Yes.
And then our tech stocks took off after them, thinking there was going to be another rise because their tech sector's been down, ours has been down.
But it's the financial sector that's doing really well also.
But financials and energy are doing so well in the US, but you can see there where the NASDAQ 100 has done better than the NASDAQ itself. But the S&P's got those tech stocks in it, and they're the big chunk of the top 25% to 30% is more tech stockish in the S&P 500, where the Dow doesn't have as many. And so that's the difference between what's going on in the US market at the moment. But when you see the Dow's made its latest all-time high was a couple of weeks ago. It's sort of tipping over a little bit and going flatter.
How about we look at that chart and see
we can go
what's
and have a look
there.
at the chart.
So I've got a chart of the Dow. We can come back to that later. But you can see there, like you say, this is the monthly chart of the Dow. It's actually slowed right down. So,
if you go and look at it on a weekly basis, it's just sort of almost like it's almost flatlining on the
well, I'm not ready to move yet.
Okay, I'll shut up.
I just wanted to have a look back here. So look back in 2017.
I can go home and get ignored, you know that.
You can see back in 2017, the market went up for about, 9 months or something straight. Now, look at what we've got here. We've got about the same thing happening 8 or 9 months up. This month it's slowed down, so there's a possibility that pullback could be coming in. We just at least need a short pullback for the market to come back for a couple of weeks to settle in and then see what happens on the other side of that. But ideally, the market will be pushing higher in the second half.
Do you know how many times, because we've been talking about 8 to 12%, right?
Yeah.
That's a 2/5 of stuff all in terms of a pullback.
That's a very technical term.
Yeah, it is. It's really highly technical. It's 2/5 of stuff all. But so many people, they're going, oh, you're expecting a crash or you're expecting a massive pullback. And I go, what's 2/5 of stuff all? Not much.
But you're not expecting a crash.
No. And that's the thing is people take things way out of context.
Yeah.
And we're saying, and even when we're talking about the US market, which I do every single week on Flicks, and so if ever you haven't seen that, it's flixx.net, and I do a rundown of the sectors in the US market and the US market itself. And to me, I'm saying I don't expect a big fallback on the US market either at this point in time, where you've got all these experts out there saying there's going to be a big crash.
Well, if the market pulls back 1.5%, everybody thinks that there's going to be a crash, but
It's not.
they don't ring the bell until it falls 20% and then say it's a bear market.
And the thing is, the other thing is it's completely irrelevant what the market's doing, because you don't buy the market, you buy stocks.
Right.
And so it's about what are your stocks actually doing. And this is what a lot of people aren't picking up, is it doesn't matter where the market's going up or down. Your stocks could be going in the same direction or counter the direction of the market.
Depending on the weighting in the index and what sector they're in.
Depending on what they're doing. And so it's not about, if we say, hey, the Dow Jones is going to crash tomorrow, it doesn't mean sell all the stocks in the US. It just means, well, maybe some of your portfolio is going to start to fall away, so you might need to exit that.
Okay.
But don't just exit until it actually happens. So what else are you going to look at?
Well, let's just have a look at another one then. So we're just looking at the comp. So the NASDAQ composite. This looks totally different.
It does.
So we've got this sideways consolidation happening on the monthly and a really strong bar so far. Okay, it is only halfway through the month. I knew you were probably going to say something like that, so I jump in early. But we're not through. This index is not through the all-time high just yet. And it looks like it's about to push through, doesn't it?
It's quite possible it's going to push through, but then, if there's some resistance around that 14,200, so maybe it'll reject it too. So we'll have to wait and see and wait on confirmation there, but it is looking like it's moving up.
You're sitting on the fence there, Mr. Gillham.
Well, I am a little bit, because again, we're a bit overdue for a pullback, and the market hasn't been normal. So therefore I'm not saying I'm gun shy or anything else. I'm just saying right now it could go through that.
All right,
but
I'm going to hang myself out on the line now and say that my prediction is it will push out through the all-time high.
Okay.
It'll go up strongly, and then it will pull back into
and then
that
it's going to
sideways
crash
move.
down 50%.
No, I'm not saying
that. It's not going to do that. Okay.
Okay. Did you want to look at another one?
No, we've been told to wind up.
All right,
I think,
fantastic.
haven't we?
Okay, well, we can talk about this next month. We'll continue and I'll make sure we do. That is all from us now about world markets. So it's time to get into our first email for the night.
And our first email tonight is from somebody called Jim, who says, hi, Dale and Janine. I purchased shares in Integrated Research Limited in April, and I'm still holding it despite it passing my 15% stop loss, as there is some support around the current levels. Now, my exit rule is now at the March low, which would be a 25% loss. However, I believe the additional risk is worth the chance of the price rising before then. Do you think this is an acceptable trading mindset, or should I sell at 15%? Cheers, Jim. I think you better answer that because I'll be blunt.
Oh, well, look, I mean, in reality, if you set a stop loss, then you've got to manage it with the rules that you set. So that's really your call to decide how much you're wanting to risk, and always decide that at the outset when you first go into the strategy or when you first go into the trade, because that way you're not prone to the emotional pull of the market depending on which way it goes. And that's when you're in that situation, I guess this is sort of a real lesson for people. And if you're in that situation where you're feeling that emotional pull, you're not sure which way to go, it just is a message to you to tell you that you really need to know more, and you need a process and a strategy to prepare you for this sort of thing that can happen. So just holding out hoping that the share will turn around is not a strategy.
To me, it's not about the stop loss. It's about, I think that it's the emotion behind it not wanting to take a loss. It's had nothing to do with the stop loss
Well, it's
itself.
just gone through that significant low. If we look at the weekly chart back here, we can see that it's just fallen through this March 2021 low just slightly, hasn't it?
Yeah.
And I mean, if a stock goes through a low, it means that it's a much higher probability of going lower. So the risk is now that it could come all the way back down to this low in December 2018. That's the problem with, sitting on a stock when it's gone through a low.
Yeah, I mean, I know most traders, when they're talking to us or emailing us in, to inquire about our courses and that, and they go, I know how to buy, but I don't know how to sell. I don't know when to sell. And part of that is knowing when to set the stop loss and where to set the stop loss at the most appropriate time. And I find so many people just don't understand stop losses themselves or where to set them. Now, this person's done the right thing. He set a 15% stop loss, and I think, well, that's great. But then when it triggered, he didn't take it. And then he wants to set it down lower, 25%, which is way, way too far away.
Yep.
But then my question would be, if he hit 25%, would he sell it? So if you're saying that's triggered right now, I'm asking the question, have you sold? Because that's his other rule.
Okay.
And so now he's sitting at 25% loss, or now we're going to get the question, well, I've lost too much now, should I keep holding it for it to go back up again? Or there's another support level below it a little bit more. But
I think there's another interesting thing too here, is that some of these stocks can be really quite volatile.
Yeah, they can.
So, if you haven't quite grasped how you're wanting to trade with your strategy and your exit approach, then why not trade something that's a bit slower moving first? Because these stocks, you just have to look at the monthly chart and have a look at it. As an example, if we look in 2018, we know the market fell back 15.5%. Well, this stock fell 64.
It's 4 times the market.
To me, straight away, I would go and look at how far the All Ordinaries fell, compare it to what the stock did, and say, be real about it and say, on a scale of 1 to 10, where am I? Where are you as a novice? Am I a novice or am I experienced? Have I had training? If I haven't, I'm probably somewhere down the low end of that. And then think, well, should I be trading stocks like this? If they're far more volatile than the market and likely to move faster, and really testing that emotional string that you don't have the training behind you to be prepared for.
But I mean, right now it's about you always got to have rules, but then there's what's use of having rules if you're not going to follow them.
Yeah,
and I find that's the case with a lot of people.
I think it's really great that he's actually emailed
I do too.
in.
I think it's fantastic.
Yeah, because not everybody, some people sit in silence in the background. They want to ask a question and they don't ask that question. So sometimes we might give you a bit of tough love, but it is because we know where you're coming from. We really want to help you. So really think about that strategy up front before you trade. Think about whether the stock really suits you, and just take this as a learning exercise more than anything. But above all, decide when you're going to get out. You've got to know and make a decision. If you decide that it's the 15% and you should be out, that's one call. If you have decided it's 25 and you should be out, well then that's your call. Don't do what Dale was saying before, that then what people do is then sometimes they'll be trying to talk themselves into staying in the trade. So just think about where you're at and make a decision.
Can I just say one last thing on the chart? And if we look at the chart again, because you brought up that prior low back in whatever that was, back into 2018, how it was 63%. Was it 2018? Yeah. But you look at, if you go in the weekly chart, the move down from that last big high, it's now down nearly 60%. So it's done it again.
Yeah.
So it's repeating the same sort of pattern.
So do you think that it could be close to a bottom then?
No, I'm not suggesting it's close to the bottom. Right now, I wouldn't be in this stock because right now it's technically it's bearish. It's proven it's bearish. It's in a downtrend. So therefore, why be in it if it's in a bearish downtrend? So, and that's where I find a lot of people don't understand the exit signals. It's not about
trends.
And it's not about, you have a stop loss. It doesn't mean you're wrong. It just means that's what the stock's done.
That time.
At that particular time. And yes, you've just got to take the good with the bad. And,
Yep.
you know, to me, it's about if you don't get out early and you don't get out at your stop loss and you let it run, it just makes it so much harder to make it up on the other side when you've got to start going the right way for you. So it's about...
So I'd also ask him, like, how many times has he done that before? You know, that's the other side.
My guess is as a new trader. And you know, in fairness to him, and I'm not having a go at him, but it's so common for new traders that don't trust themselves, don't trust their rules, and they break rules, they break buy rules, they break sell rules.
If they're not trained how to do back testing, they can't actually see the proof in the pudding for themselves, because that's what I love about the back testing. You don't have to ask us, you actually learn how to do that properly, and then that will actually tell you what you should be doing. You don't have to sort of think, well, should I be getting out on a 15% stop loss or a 10% stop loss? The back testing tells you what works. So just keep that in mind, and perhaps consider, you know, how that can help you if you know that.
Okay, so that's it for integrated research?
Okay, we've got an email from Shani next.
Oh, good.
Hi Dale and Janine, a lady, it's great to see. I'd love to get your opinion on buying expensive stocks and less of them, and buying many cheap stocks. I've recently found an entry on Cochlear, and I've added it to my portfolio and set money management rules for the stock. Well done. Planning to hold for the long term. After discussions with people, there is a belief that the expensive stocks would have to rise by hundreds to make a profit, whereas the cheaper stocks, you can make the better profits with the stock rising by dollars. Thanks for your help, Shani. I think if you care about these people, I think maybe buy a copy of Dale's book, or lend them yours if you've got it, to get them to understand what that's all about.
Never take financial advice from people that are broker than you. And don't know how much money you've got or not, but never get financial advice from people who just not successful or not successful
or haven't
traders.
been trained, you know, like, I mean, people look at the stocks, and I remember I started out the same way, thinking, you know, I could buy all of these shares in this particular company, but not knowing much. And so, you know, then you hear the talk about buying quality over quantity. You know, it always makes sense, doesn't it?
Yeah, but it's about percentage gains and drops. It's like, you know, you might have a stock like it's $100, and on any one day it could go up and down $5 and $10.
Yeah.
But you get a dollar stock, it might go up and down 5 or 10 cents a day, and that's what it does. So it's about, you know, if you put
what you're saying, it's all relative to the side of the share. But some of those smaller shares, because they are so volatile and there are liquidity issues, can get pushed up, like these people are telling you, in much quicker and much higher percentages, but they can also go down much faster. So up in stairs and down in elevators, but the bigger stocks are less likely to go down in an elevator that's out of control, whereas the smaller stocks can really get into those situations where they're just sold off so quickly, and you know, it's much harder for investors or traders who are inexperienced to really know what to do in those situations.
Oh, it is, and we're going to have a look at Cochlear in a second anyway for you. But to me, it's like it's not like going into a lolly shop where you've got $5 and you're trying to eke out as many lollies as you can for your $5. It's about how much you're going to make and what's the potential of making that money, and is that stock in an uptrend or downtrend, how liquid it is, how volatile it is. There's a whole range of reasons, and I know a lot of people go, I've got this many shares in this company, or I can have this many shares in that company. I'd rather that many shares.
But you've forgotten one word.
What?
Risk. It's not a swear word. You're looking at me as if
it's
you don't know what I'm going to
say.
But the risk is the thing. So these people are looking at the fact that, okay, maybe it can move faster, but what's my risk to get there?
There is absolutely, positively no correlation between the price of the share and what you're going to make. It's just not. It's just a fallacy. It's a myth in the market. Please don't believe that. It's about the quality of the stock you're buying and its potential for growth. If I put $1,000 into a $1,000 stock and it rises 10%, I still make the same money. If I put $1,000 into a 10-cent stock and it rises 10%, it's still the same amount of money that I make. It's about what's the potential for the stock. And Cochlear is a brilliant stock.
Yeah,
do you want to have a look at
stock. Okay, so we've got the monthly chart on the left-hand side. So we always look at the monthly for people who are new to the show. big picture, had a bird's eye view first so we can see what's going on, and then we're looking at the weekly chart on the right-hand side. Now, with Cochlear, it can be quite volatile, especially over the past few years. We've seen a lot going on with Cochlear, and then there were some corporate actions in there that caused some volatility in the share price as well. But we've recently seen the stock move up, and it looks really nice. To me, it looks like it has the potential to go through that all-time high.
If you'd owned Cochlear for the last 20 years, would you be happy?
Oh, of course you would.
You'd be exceedingly happy. I think if you put money into Cochlear when it floated, actually, let's say, I think if you put $1,000 into Cochlear when it floated, I think it was this one and CSL I worked out, you'd be close to being a millionaire right now.
Yeah.
That's how good the stock
I guess
is.
that the question could be different in that if she actually said, okay, I've got this stock Cochlear and I've got this other stock, which is a smaller stock, and we looked at the charts and she said, well, which one would be better to buy? To me, that's a different question altogether.
That's correct.
But it could actually help her because it just sort of, we wouldn't necessarily pick Cochlear over the other stock. If Cochlear was falling, then we would be saying no.
It's all about risk. Is that four-letter word?
It's all risk, yeah, exactly. So it's all situational, really, isn't it?
And I think that's a lot of people don't get it. It's not about how much you can make on any one trade. It's how much you don't lose, and it's about minimising the risk on any one trade. And I think too many people think about how much they're going to make and disregard the risk, and that's really what Janine's actually saying. So, but now's the time to move on to our next question, unless you were going to say something.
No,
I don't want to cut you off. Okay, well, the next question we got is from Rebecca, who says, hi, should a trailing stop loss be continuously moved up if a smallish market drop is expected? Would you leave extra wriggle room or continue to move the stop under the previous low and buy again later if the stop is hit? Thank you and best wishes, Rebecca.
So
Another stop loss question.
So this is about managing risk, right? So it's a really good question. So she's thinking about it, and it's good to see that people are thinking about protecting their profits. But what do you sacrifice if you have that thought process at the same time?
I don't know. You can tell me.
Well, I guess from my perspective, it's about what were your rules in the first place, and what are you actually trailing up? Where are you trailing it up? Because a lot of the stop losses, the trailing stop losses, if you know proper ones, they actually trail themselves up because you're waiting to actually see the formation occur and for that to unfold. And then, of course, if the stock moves up, it continually does it. But I know that there's a lot of people who use what I would say was stuff that, you know, was around when we first started learning to trade, where a lot of people would just, you know, trailing stop losses for short-term trading under previous lows, and that's not necessarily the right strategy for the particular share. It depends on the stock. So, you know, I guess it's
about knowing the stock, isn't it, really? And the thing is with the trailing stop loss, oh, sorry, let me ask you a question. Would you adjust your trailing stop loss if you thought the market was going to have a small dip?
Would I adjust it? Generally, no. It depends on what the stock was actually doing and how it was unfolding. It's always stock dependent more so than the market. But I guess if I had done some big picture analysis on the market and my analysis was indicating that the market was likely to pull back and it started to give indication that it would, then I guess I would be a little bit more cautious about the approach, but you've still got to have your rules in place. You know.
Yeah, but what's a smallish drop too? And the thing is, if you've back tested a stop loss on a stock, okay, and you know what it is before you go on in, you go, here's this trailing stop loss I'm going to use, here's my entry, my exit, here's my money management, this is what I'm expecting. Why would you need to adjust your stop loss?
Only in a situation where the market or the stock gave you reason to.
Yeah.
Where you see something, so it's confirmation of that starting that really would tell
you just don't move it up because you think something might happen.
No, because often a stock will unfold and your rules will actually eventually, it's like trend lines. A lot of people, when they start using trend lines, they get nervous because the stock pulls back. Yeah. But stocks are always going to pull back. They could pull back 10%, could be even 15% off the high before you get a trend line exit. But the trend line often will keep you in the trade much longer so you can actually get a decent return.
I don't know how many times,
so it's a balance.
Yeah, it is. I don't know how many times I've had a stock that's got to my stop loss, hasn't quite triggered it, and then just turned around and I've made 100+% on it.
Yeah, well,
it just happens quite regularly.
There was a guy who I remember years ago, he said he was getting a win-loss ratio of something like 40-something%. I think he was getting 45% on his trading strategy. It was really short-term stuff. But he kept on trailing the stop right up underneath the bars on the chart because he was afraid that it would turn against him. So the fear was overriding his decision-making. But in reality, when we looked at his trades, he could have actually done a lot better had he actually given the stock a bit of room to move, and he would have been able to stay in it But he made the broker heaps of money in that process.
Instead of himself.
Yeah, that's right. So did you want to say anything more on that?
No, I think we've covered stops a lot because, again, having your stop loss set in the right spot is really, really, really important. It's not something that's mildly important because unlike property where you make money when you buy, or they tell you make money when you buy, the stock market is you act to make the money when you sell and understanding how to sell properly. And that is trailing stop losses and proper exit strategies. But I find people will jump out too early or they'll wait way too long to get out of it. They'll see it drop falling and then they live in hope that it'll stop falling and start to rise again. So I think most people, I find, get it wrong. And they might have a stop loss rule, but then they don't trust it.
Yeah, okay.
And they second guess it, and then they go, "Oh, and what happens?" They don't like losing, do they?
Well, it's not trusting because they haven't proven it to themselves, I think.
Yeah. So that's it for me on that question.
All right. It's time we get into tonight's topic. Yay. ASX tech stocks on the rise. Is now the time to buy. But before we do, remember, you can grab a copy of Dale's first book, How to Beat the Managed Funds by 20%, for free. All you need to do is pay the shipping. To get your copy, visit wealthwithin.com.au and you'll find a link to the book at the top of the homepage. Now, while you're navigating your way to order the book, listen along as we introduce tonight's topic. ASX tech stocks may again be on the rise. The challenge many face is knowing when the right time is to buy. We're going to share our thoughts on exactly this tonight as we examine the technology sector and some of the best stocks that operate in this space.
Now, we saw the information technology sector take a big hit after many stocks within the sector traded to dizzy heights in 2020, and some continued their bullish streak into 2021. I mean, Afterpay rose almost 2,000% since the COVID low in March 2020, and many investors remember the frenzy in the market over these stocks, and I really are hoping that this will occur again. Now, last week, Altium rose 28% after a takeover bid was announced, while IRESS was up 20% just on rumours of a takeover bid. Now, in addition, the top 6 best performers in the ASX top 100 stocks last week were all tech stocks, including Altium, Appen, Afterpay, TPG, NextDC and Wisetech, with gains of between 7% and 28%. Now, the whole technology sector was up 6.96% last week. Now, what is most important to be aware of is how this sector is still down over 6% for the calendar year, with Appen down 44% still, even after the rise of last week. Afterpay was down, NextDC was down, Altium is down just over 2% in the same time. So there's all of these stocks haven't performed that well this year.
So what does all this mean? Has the technology sector bottomed out? And are these tech stocks starting a new uptrend? We'll bring up the charts and reveal what is probable to occur and where the opportunities are likely to be in the second half of 2021. Most importantly, we'll share our thoughts on the risks and important points you are wise to consider if you hold these stocks already or are looking to buy. So let's get into the charts.
Okay, so what are we going to discuss today? We're going to go first onto the sector, aren't we? The big picture first.
Yes, I think we should. I think we should look at the list of stocks just in information technology for now.
I'm going to ask you a question. How many stocks are in the technology sector?
Oh, I don't know.
Okay.
It's irrelevant to me because there's so much rubbish at the bottom.
Oh, well. I thought it was a nice trivia
it's a nice
question.
Little quiz question.
It was a quiz question.
Okay.
I just thought I'd throw it at you. Okay,
Yeah,
go
good
ahead
one.
again.
Now I've got egg on my face.
Oh, shut up.
Yeah.
I'll put my glasses on.
All right. You're lucky I'm not a vengeful
So this is
person.
ordered in terms of market capitalisation with Afterpay at number 1.
Yes, so we've got APT Afterpay and we've got Xero closely behind there. So, but I guess there is a big gap really in the market capitalisation because Afterpay is about 30% more in terms of its size than Xero. But look, a stock's rise and fall can change that pretty quickly, can't it?
Yeah, absolutely. I mean, Afterpay, if it falls heavily, it can go drop right off on that one.
Now, we've picked some of these to look at, but obviously not all of the ones at the top of the list this week. We're just going to talk about some of the ones that you mentioned earlier.
I think Xero was up there.
Computer share, NextDC is another good one, which is on the list there. Before you try to grab the mouse off me, I thought I'd beat you to it.
So that's for the month, not the week, so at the moment.
Okay. And there's car sales there.
Yep, up 2.5.
Yeah, and then
Altium.
Slowly behind. Now, there's a few other stocks in here, including IRESS. I think that was another one down here that you
Correct.
mentioned.
It was up 20% last week, just on a rumour that it might have a takeover bid, not even a takeover bid.
Okay, and then we've got Appen down here, which is up 4.6%, so that's pretty good as well.
And you've got Myob and a few others there as well.
Yeah, so look, so all interesting stocks. So it's good to look for the biggest stocks in the sector whenever you're looking for a stock to trade. Stay away from the bottom end. You know, you don't want to be the bottom picking person. If you are, then you've got to ask yourself, why am I doing this? Like, what is it in my psychology? Because the market's all about the psychology. What is it in my psychology that's actually causing me to look for these low liquidity type shares that are generally higher risk? You know, and try to pull yourself out of that, particularly if you've just started. So you don't want to start on the wrong foot. So take the big stocks. So we've got some really nice ones at the top of the list, as Dale mentioned before. So why don't we have a look at the sector chart, shall we, and see what's happening?
At the technology sector.
A picture tells 1,000 words. So let's have a look there. We can see that clearly APT is dominating the shape of this chart, because we know that the strong rise that happened up here, it's pretty much what Afterpay did, and then the pullback we've recently seen. Now we've got a rise coming out of that low just recently, but technically the chart's still down at the moment. Even though it's closing up for the month, it still hasn't proven from this bigger picture perspective that it's going up yet.
Yep.
Okay, so we've just seen a couple of weeks up, and all the rise was in last week. It's not necessarily confirmed as a sustained move just yet.
I mean, obviously, if we expand this back up again, and this is what we're sort of talking about earlier when we're talking about the sectors, we're saying your stocks could go counter-cyclical to what the market's doing. Yeah,
so you can have stocks in the sector that might not be as big, that are actually have been in decline, long-term decline, and are now just trying to turn around, like Appen, that may actually provide some good opportunities in the future. So you don't necessarily have to pick the ones that have done, say, what APT have done. There could be others in the sector that have been, you know, sold off, and they're the ones that are unloved stocks that might turn around.
Yeah, and the reason why I'm sort of bringing that up is obviously we've had a move down from this high through here back in February 2021. We've had a move right down. It's come back up, down and up again. So if I use my little trend arrow tool here, we know that we are bull markets. You see this sort of stuff happening all the time, where you get moves in the opposite direction to the market. But we also get the opposite happening, where we get the market moving back in the opposite direction as it falls away. So what a lot of people don't consider is they see these sorts of stocks moving up, but they don't consider, well, hey, this has gone up. Is it now in a new bullish trend, or is it just one of these moves in the opposite direction to the longer term move? So that's what we have to figure out, isn't it?
Yeah.
And every individual who's trading or looking at these stocks at the moment has to figure out for themselves. And it's one of the big reasons why we say always trade on confirmation, not speculation.
Very good
And we talked about that with A2 Milk and what was the other?
I mean, look, how many times did we look at A2 Milk on the show when it started to fall away, and we said, oh, this is starting to look really interesting as it's seemingly bottomed. Hadn't given confirmation that it was rising, but we said, wait for that confirmation. Then it kept falling. And it kept falling, and then the legal case came out about it, and it fell really hard. So a lot of people who tried to catch the falling knife and jump in before proper confirmation that it was actually turning around, they'd be seriously burnt.
Yeah, we got a few emails of those people, from those people saying I should have listened to
So no one's asked us to look at it since.
No one, no, because they got their fingers burnt. And as I said, we did get people emailing in, which not to put on the show, but they just said we should have listened to you. I got in and I caught a falling knife, and I've had a few of those emails on A2 Milk, and I forget what the other stock was that we were talking about at the time, but same sort of thing. So what's the difference here? And we'll look at the stocks, but where do you think this sector's likely to go?
Look, at the moment, it looks great.
It looks good.
It looks like it's holding up well. So if we see another couple of weeks up, ideally I'd like to see another week up, and then I'd like to see it pull back and test support before it moves up again. So that exact example that you've shown on the green line going up.
Okay, so let me just get rid of that. So what you're looking for, if I draw my little trend arrow, so you want to move up, and then I move down?
Yeah, that's an ideal scenario.
And then I move back up again?
Yeah.
That's what you're saying.
The first thing I want to see is for the sector to actually get above last month's high.
Okay, so you want the sector to get above last month's high. So this is this high over there. So we want to get it above 2136.
Now, keeping in mind that this is dominated by APT.
Correct.
Right. What I'm talking about is I'm talking about the biggest stocks, because it doesn't mean that there might be smaller stocks in the sector. Like you said, some could be going up, some down, some sideways, that may actually move differently to APT.
So I think some people just assume that if the sector's going up, that all stocks within that sector's going up.
Yep.
And that's not
So
necessarily
people say,
true
oh,
either.
energy, you've got to jump on that. So they try to get into energy type stocks, but there's only certain energy stocks that are worth putting the money into.
Okay, so we're still waiting for the technology sector to confirm that it's stopped falling.
Yep.
But do we need to assume it will keep falling until it tells us it's not?
Generally, yes.
Okay, so therefore that way, any times we take a trade, if we were to take a trade in a stock right now, we would need to do that with caution, but the stock would need to tell us it stopped falling.
It would need to have a lot of boxes ticked.
Yep.
Yeah,
A
which
little bit
some
more.
stocks could do that right now and produce an opportunity to trade it, to get
I'm
in
asking
early.
all the questions everybody's asking at
really?
home. They're sitting at home and they're going, I wish I could type to Dale. He can ask this question for me.
Great. Look, I think we should move on to to one of the stocks. So let's have a look at some examples. So here we've got Altium. Now, I know you want to talk about this one. You've been hanging out to discuss it.
Yeah, it's because it was a bid. It was a bid by a US company to take it over. Now, the company itself, Altium said, the board said, no, we think the company's worth more money, so they rejected the bid. So when you look at it now, the offer was, I think, was $38.50 or something a share, I think, from memory. I did look at it at the time. So you can see here the
37,
offer.
was it?
Or 30, maybe 37 or 38.50, I think it was, the actual offer, the bid to buy from the other company. But you're looking at this, here is the week before, it closed at $27. Now, no, wrong one, don't need that one. Get off my chart.
Okay.
It's not listening to me.
Well, it's like a lot of people.
It's like a lot of
like
people.
me.
Like you never listen to me. So from the announcement to it opened up last week, there's 30%. So
Yeah.
people would have jumped on this on the announcement and they're buying in at that price there at around 36, 37.
What the?
Correct.
Why would you?
Why would you?
That's nuts.
Yeah, and that's what I'm saying is it jumped automatically up there because of the bid there. Now, obviously, Altium, the board at Altium said no. We think it's worth more money. I haven't read how much more money that they said, but they said it's worth more money. And I'm not discounting that that's wrong because we've seen that with some other companies where the board just kept rejecting
But how many times have we seen these takeovers fall over?
Yeah,
And the share price just plummets
correct.
afterwards.
So right now, the share price is the last 2 days we're seeing it hasn't fallen away, and it's not likely to until the company, the US company, well, it's the hope at the moment the US company will come back with a bigger bid.
Okay, I don't really care about all that, can I just say?
Okay.
I hope the shareholders get a good deal. That's what I care about. I like the fact that the board are actually holding out for more.
I do.
However, when I see a chart like this, I think I can't trade this anymore because it's a mess on the chart now. So I would just forget about it.
So there's almost no upside, or whatever upside. So if they raise their bid by 10%, there might right now there might be 10 or 15 or 20% if you're in it now or you bought in now. But there's downside if they don't come back with another bid.
Yep.
So therefore, there could be if they say no, we're out. We don't want to pay that much.
So
for
this is not one of our opportunities then.
No, it's not an opportunity right now.
We need to get
it's
onto
already
one where there is one. Come on,
geez.
let's talk about the next stock.
Oh, there's more gutsy stuff to talk about in takeover world and things. Looking at some of the stuff, I was looking at a stock the other day, and
I just can't stop you, can I?
No.
You want to talk about
all right,
it?
I'll shut up.
All right. Okay, next stock, please.
But they want to hear. Okay. Next stock, please. Thank you.
Okay, so we've got Appen. APX is the next stock. Now, this is one that I think that we've both been looking at and thinking when this starts to take off, it could be a really nice little opportunity. Because it's got potential, is that what you're saying?
Absolutely.
Yeah. So it's been oversold potentially, is what we're saying. Now, never assume that a stock, just because it's fallen heavily, is oversold. That's the first rule. Because the stock can always go lower. Rule number one.
Correct.
If it's traded lower, and we can see on the monthly chart, I'll just expand this out a bit so we can see it more clearly. But if the stock has been trading at, what's that down here? $2.50. There's nothing to say that it couldn't trade at $2.50 again. So that's the risk with these things. But the idea is to take the lowest possible risk that you can if you want to get exposure to a share. Right? So how do they do that?
So it's not about buying it at the cheapest price.
No, it's definitely not buying it at the cheapest price. So how do you get into a company that is actually been in free fall like that?
Well, you wait for it to confirm it's in a new uptrend.
Or
what?
Or it's met one of the rules.
It's met one of the rules of my buy rules. It's met my buy rules, which is also confirming it's going into a new uptrend.
Yep, you're walking with me?
I'm walking behind you at the moment.
Okay, so you can see here that on the chart we've got a number of situations where the stock has risen. Suckers rally, people got pulled
And
into
people
the
bought
stock.
it through there.
It pulled back, went up. It didn't ever go through that high. So this is where it got sold off again. Same sort of thing kept happening all the way. It kept making these moves and then falling again, making these moves and then falling again. So at this point, we still don't know whether it's going to make the move up or not.
But if it starts to move up, this is looking good.
Yeah, but there's always a risk when a stock's been falling that it could go lower. So I say risk first and then opportunity second. So how do we minimise the risk in this situation? Well, you know, at the moment, the monthly chart's showing it's still strongly down.
Correct.
So the challenge is, at the moment, with the monthly
Patience.
being where it is, you know, I'd want to see it get above this high of 1575. That's like a more conservative perspective on it at the moment. That may change depending on how the next couple of weeks unfold. What did you want to say?
No, I'm just saying is people will look at this going, well, you know, why can't I buy it now? It's hit this low here, it's had a higher trough here, so why can't I buy that? And that's what people say, and they go, well, if I wait to 1575, it's now 1405, so 1575, I'm now going to get, it's another couple of it's another over 10% more. So why can't I buy 10% cheaper now?
Well, I thought I just showed you, because all the way down here it kept saying that it was going to go up and then it didn't. So unless somebody has a really tight stop loss potentially and they're willing to take that bit of risk and, you know, but it's all about probability for me. So if, for example, you looked at the history of the stock and it said that, you know, 5 out of 10 times you could have taken it on one of those really tight entries and it failed, like the other 5, I wouldn't take that.
I wouldn't take it.
You know, it's got to be 7 or 8 out of 10 times for me to be interested in it. So,
okay, so we like this as probably a 7 out of 10, but it's not a 10 out of 10.
But if it goes up 10% and it does that, it could go up a lot more.
Okay, APT. Now we're on to the big one. APT, Afterpay.
Afterpay, it does look nice at the moment because we've looked at the sector chart and we think it looks interesting, but has it confirmed that it's stopped falling? We've already said we don't think. It has confirmed it stopped falling at this stage based on looking at the monthly chart, which is still down, even though the month is starting to move up. Early signs are on the weekly chart that it's starting to look interesting. Do you think it might be about to form a trend line for you?
Well, it's possible we might hit this and pop down again and then go back down.
Okay.
So it is possible because we've seen a few months down through here. It is looking better. I'm not saying it's not. I'm not suggesting it's not going to go through it, but it's possible it might bump its head on this sort of angle, which is, you know, stocks do momentum on the way up and on the way down.
Yep.
They keep running up and hitting their bottoms on things. If I bring up the monthly chart, we'll probably be able to see that. You can see how, if I draw a trend line along here.
But do you think this stock is going to repeat what it's done from March to 2020?
It won't do that again, no. I don't think it will.
You can never say never.
Well, I just did.
Well, I don't think you can say that.
Okay, well, what would you say?
I mean, the stock was above $100, right? Okay, and it's still just around that level at the moment. And we know that $100 can be a psychological resistance level.
Yeah.
I'm not saying that it's going to do it right now, but you just have to look at the stocks in America.
So you're going to suggest it's going to go 3,000% again. Is that what you're telling me?
No, I'm not saying that now.
I think everybody's saying, let's buy today. It's gone up 3. Janine's just said that.
No, what I'm saying is that if it actually starts moving up and it gives us some sort of good rule entry and a confirmation that it's going up, then it's got the potential to go through the all-time high if we get that.
Still a bit early.
But it's early days at this stage, and the risk right now is that, like you've said, it could fall because it's right at that $100 mark as well, which is that psychological resistance level for it.
Okay, but it's okay. Okay, now we've got to TPG, and telecom's always been a struggle, isn't it? These sorts of stocks. Yeah,
you like telcos type stocks. You threw that one as sort of a little red herring on the list, didn't you, TPG?
No, it was one of the top 6 rises last week.
Okay,
that's
so
why it's on the list.
chose it, but it's actually been in decline quite strongly. Just because it went up 1 week last week doesn't mean that it looks interesting to us.
It's quite a volatile stock, isn't it?
Yeah, I'd say it's way too early for this stock at the moment to say. It's got really nice support at about, 450 or thereabouts, I think.
Huge volume coming in here, so that could be a sign that it's a bottom, or it could be another counter trend move in that move. But right now it's looking better, but it's still way too early.
Okay, it's still way too early, but it's an opportunity is what you're saying coming up.
Well, it's possible. I'd sit there and watch it because it can move quite fast when it does move, but it's been in this messy sideways through here. And
okay, what if it pulls back below $5?
I'm going to sit back and wait for it because it could hit down to about $3 to $2, between $2 and $3.
Okay.
That's what I'm thinking. But again, just a tad too early right now, because you could be catching a falling knife.
Yeah, so risk first and then potential.
Correct.
Thinking risk, what's the risk and then what's the reward likely to be.
Okay, next stock, we're into NextDC. Look at that. That one looks better, doesn't it?
It looks interesting. It still hasn't convinced me though, because look at the fall that happened after that initial rise off the recent low. So it actually looks like it's a little bit ahead of APT.
It's a bit ahead of APT, yes.
Yeah, in terms of timing. So we had this low here in March 2021, but it rose all the way up to the angle of that line that you've got there, pulled back really strongly almost to that low. So that's not a really strong sign, but okay, last week again, it was voted up and it's pushed up through that line.
I'd like to see it fall away a little bit, get a higher trough and then take off, and then I'd be buying that one.
It's got potential.
So I like that one better than APT, and I like Appen, still like the first one. Was it Altium?
Okay.
Appen.
Right.
I can't remember which one it was.
Next.
I'm getting old, Janine. I can't remember names.
Wisetech. Okay, so this was one of your favourite stocks, and it's
like
actually
this one. I've been watching this one
times.
for months, but it just keeps struggling to get through this. And I kept setting my buy entries right up through here, and it just keeps hitting it and coming back, hitting it and coming back, hitting it and going back. And that's really where you have these rules around. It needs to give you a solid signal to buy.
Okay, so
this never triggered my rules.
This last move is very similar in shape to what's happened with NextDC. So see how it actually went up and pulled back NextDC? Well, Wisetech's done a similar sort of thing from this low here in February, up and right, almost right back and out. So what you're saying is it really needs to get above all that, really, to prove.
I need some other thing to tell me it's strong. It's not falling away, unlike some of those other stocks. They've fallen away heavily.
Yep.
But it's got to really get through that sort of resistance level and show me some sign that it's going to rise and continue to rise.
So you're saying not a buy right now, but it's got potential, and it's got about a 14% upside to the all-time high, which is okay if it gets through that level. And then if it does go up there, in theory, it should keep going, shouldn't it?
In theory, it should keep going. Yeah, as I said, to me, I am looking at the tech stocks. I'm looking at this one. I'm looking at the other ones that I've mentioned as well. So there's about 3 of those I'm looking at the moment for me to buy personally.
Okay.
You know, not our clients, because some of these stocks can't fit in our clients' portfolios. But I do like them, but they're just a little bit too early. So don't get FOMO, guys. Just be a little bit patient, because if the market does exhibit some weakness, they may come down a little bit. But I want them to prove that they're going up. So anything else you want to say before we wrap it all?
Yeah, I think basically what you're talking about is protecting people from themselves.
Always risk is number one. Always risk is number one. But I think it's about time we actually get back into some more emails.
Now, before we dive right into this next email, we do receive the occasional email for this show from students who have either completed or are currently studying our Diploma of Share Trading and Investment. Now, we do love hearing from you. However, remember, this show's pitched at a basic level, and we want to make sure that you're receiving the right support to suit your current level of knowledge so that you get the most out of us. So if this is you, remember to contact our office to inquire about the comprehensive support services available to you.
Okay, now the next question, Janine.
Okay, let's get into our next email then, shall we? Okay, one from David. Hi, I discovered your show last week, and I love this, and scoured through most of them. And now I'm up to date. Great content.
Puppy.
Could you take a look at Piedmont Lithium? I'm looking for volume to increase as it approaches the higher levels above $1 and resume uptrend above all-time high of $1.14. However, there are a few minor levels when looking left to clear before blue sky territory. Lithium in general is looking like a promising sector. Kind regards, David. So it's good to look at some of these different areas in mining, isn't it?
Yeah, it is to look at some of these areas, but I think lithium has been talked about and talked about and talked about and talked about and talked about. And I'm yet to get too excited about it.
Look, I mean, it sort of annoys me in one way in that people get, this gets thrown in their faces, and often it's a lot of people who are inexperienced to the market that hear about these things, so they end up buying into really high risk stocks. Now, Piedmont's done incredibly well. It's nothing to say that it couldn't do it again. You know, the stocks that are going higher, as he talked about, blue sky, which I liked his terminology. Once it gets into blue sky, there's not a lot stopping it. At the moment, it looks interesting. It's consolidating, but I agree with what he's saying. It really needs to get above that resistance around that $1 mark and start pushing up towards that all-time high, because right now it's sort of just hanging there, really, isn't it?
And how much can it go? That's the question, isn't it? How high can this thing go? It's already...
The stock's trading below $1, so the potential's anything
there.
Really, in terms of how high it could go. It could go 20 cents above, 20 or 30 cents above the all-time high, just to be conservative on that. Is a potential, but that's got to get through that dollar mark. I really agree with what he's saying.
Yeah, look, I don't discount what he's actually saying. As I say, I agree with him too, because it really has been a huge rise through 2020 into this year, and it's massive. But
what I found interesting too,
are the fundamentals there? That's really what I would ask.
Sorry, I just got a bit excited there.
Okay, sorry.
I just saw a pattern that formed on the chart. We were talking about that last week with a number of those shares. There was the GameStop one.
Yep.
Stop. This is the same sort of pattern that formed, and when it pushed out of that, look what it did afterwards. So it's slightly different, the pattern that's formed this time. It'll be interesting to see what unfolds, and I think I'll keep an eye on it as well, just to see what it does.
Well, how about you both keep an eye on it, and then you can both chat about it in another show.
Okay, that sounds good.
Idea?
Make sure you report back, David.
Cool. Now, the next email we have is from Justin, who says, "Hi, Dale and Janine. I purchased both of Dale's books, a couple of DVDs, and subscribed to your YouTube channel. It has truly opened my eyes on how to go about share investing and trading. Now, I particularly like the portfolio setup and risk management aspect of it all. Now, my question relates to diversification risk. When setting up a portfolio, I am currently setting up a portfolio of 8 to 12 stocks based on the ASX top 20. Now, if Westpac or NAB were to present buy signals, should I invest in either of these two companies, given that I already hold 2 financial sector stocks? Now, I ask this question based on the following. The financial sector has 5 stocks of the ASX 20, making up 25%, generally speaking. A third of the top 20 is going to go up, a third is going to go sideways, and a third is trending down. Now, if the financial sector is trending up and I don't take advantage of most or all of those stocks, I will be able to fill my desired 8 to 12 stocks. Interesting question. There's more than...
There's a few things in that email to talk about, really. So what did you want to discuss first?
No, you can go. I want to be...
Ladies first?
Yeah, absolutely.
Okay, look, I was wanting to talk about the 1/3, 1/3, 1/3, because it doesn't mean that, even though that's a general statement that 1/3 could be going up, 1/3 could be going down, 1/3 sideways, when the market's running, most stocks are going up with it if they're big stocks in the top 20. So on that basis, you're always going to find shares to put in the portfolio. You may not fill it, that's possible, but you might not fill it. But if there are banks running, and you've got 2 stocks, I wouldn't necessarily load up, because you don't want to have necessarily 50% of your portfolio, especially right now if you're expecting the market to pull back, because if the market's going to pull back, the financial sector's going to pull back. And therefore, why would you want to load up on those shares right now in that scenario? That's the timing side of it is really one point, but there may be the right time to load up on a couple more stocks, at least a third. Anyway, have 3 stocks that are in the financial sector.
But I think he's talking about banks, because there's more than 5 stocks in the top 20 that are financials.
I know, but there's nothing wrong with having 3 banks or in your portfolio if they're all running.
Yeah, because as long as they're going up and you've got your exit strategies on it, what's the issue? And a lot of people go, well, then I'd be overweighted in banks. Well, if they're going up, they're going up.
There were some people who had 50% exposure to the banking sector, but the difference is they had no strategy to manage their exit and risk. So, if you were trading the top 20 and you had 4 or 5 stocks and you had a 12-stock portfolio and you've got a strategy to manage the risk and you've been buying on rules, that could be different, couldn't it?
Yeah, and I think the last part is about the 8 to 12 stocks. It's the ideal that you're aiming for is 8 to 12, but in any one year you might have 12 stocks for 2 or 3 months, you might have it for 6 months, you might have 8 stocks.
Yeah, because you don't need to fill the portfolio.
It's just building your portfolio and your position sizing, because sometimes you'll be fully invested and other times you'll be selling down a third of your portfolio and then waiting for the next buys to come up. So it's just an ideal. And if you're a little bit worried about it, just move out to the top 50, don't stay in the top 20. But some great stocks.
One of the things that really clears all of these sort of questions up is when people learn, and I think that was a big aha moment, if I can say this, right, for a student who had gone through the short course and gone and done, told me they've gone and done the module 3, because once they'd done the back testing, they could actually prove all of this for themselves.
They do.
And model it through and see the outworkings of all of that. And it's not hard to do this, it's really not, once you actually learn how.
Okay, and that's it for our question on that one.
All right, we've got a question from Julia. Oh, lots of ladies tonight. I'm really excited about that. Well done for emailing in. Hi Dale and Janine, I've been watching Woodside for a while now and noticed that it has crossed a trend line. It is also has good EPS growth. Do you think there will be upside on this stock in the medium term? Thanks, Julia. Okay, so this was one of the emails that was quite long, was it?
Yep.
And you've shortened it down a bit.
I think I've shortened nearly every email.
People went crazy.
Some
in
of them
the
like
emails.
War and Peace.
Really?
Yeah, it was good. I mean, it's great. I love reading them.
Yeah.
You know, but if we just read all the questions, we'd lose a whole hour.
So there could be a trend line there, is what you're saying, though, couldn't there?
Maybe.
Okay, so the stock was definitely in an uptrend. Went here.
Yep.
Was the stock in a downtrend? Let's have a look. I think it was. I've just done a quick count without being too picky on that. So, you know, we're talking about a trend line entry. Potentially, you could tick the box there. It depends on whether it had closed above it.
Yep.
So what are your thoughts on it?
Well, look, I do like it at the moment, and I think it is. It really hasn't been falling away. It's in that energy sector. I do like the energy sector moving forward. I think that's going to be good. You know, right now it hasn't really confirmed its bottom. It's had one really strong week out. This one just a bit, just slightly higher than the week before. So I think I'd wait for a little bit more confirmation before I jumped into that stock.
Yeah,
but I do like it.
We heard that, you know, in the US, they just got all excited about the energy sector and it took off. So just because our market plays copycat and follows that for 1 week doesn't necessarily mean that, you know, even though we've been saying the energy sector is good, at times it will be good, at times it'll be great, and other times it will just confuse. The energy sector can be quite volatile. But, you know, is this a good stock for trend lines? Do you know generally? It's a trending stock.
It's okay.
Because of the volatility, it can change, can't it?
Yeah.
So trend lines don't necessarily work all the time, is what you're saying.
Correct. Now we've got a question from Thomas who says, hi Dale and Janine, everyone knows that the reason for a stock to go up or down depends on the law of supply and demand of the market, but what is the real reason of investors wanting to own good companies, especially individual investors who barely have any influence over the management team that creates the demand rather than making profit from buying low and selling high? Hopefully I could hear your thoughts and answer to this. Thank you so much, Thomas. It's an interesting question.
It is. It's quite in-depth. He's thought about this one.
Well, I don't need to influence the board. You know, the whole idea is when you research a company, you're researching, is this a good company? Is it well managed? Has it got good fundamentals? And then you wait for it to look at trend. The board is about creating value in the company and setting the direction, and then the management drives that from the board.
Yep.
So if you like the company from a fundamental point of view, then what drives the stock? And it really is what causes stocks, or what is the trigger for stocks to move in price. Yes, it's supply and demand, but what creates the demand? And that's the perception that we have about that stock into the future.
Yes.
Of whether it's going to have higher profits and everything else. But I think you're getting into it way too deeply, I think. I don't think you need to get into it that deeply. Yeah,
so you're thinking, because he's thinking high level to me, rather than thinking about what he needs to be thinking about.
Yeah, it's the stuff, well, correct. That's probably a better way of me saying rather than he's overthinking it. You really just need to get down to looking at undervalued companies that have got good potential to rise and then jump in on it, because as an individual investor, I don't need to influence the board. I just need to know that the board's doing their job, and if they're not, it's going to reflect in the share price, and it's going to show me on one of the charts. The charts
look at QBE.
Don't lie.
QBE's been a good example over the last decade or so about what's going on there. So have a look at that one.
And often we see stocks that get this rampant speculation that they're way over their fundamental value because there's so much demand because everybody's jumping on it from chat forums.
Okay.
So anyway.
Next we have a question from Holly, another lady again. Hi team, last week AGL closed above a long-term downtrend line. Assuming I drew a downtrend line correctly, which to me indicates that the trend may be turning around, given the length of the downtrend high in April 2017, would you consider the trigger of that buy rule to be strong enough signal here? My thought process is that it's still early on this one and I need something else to convince me. Regards, Holly. So great question there. So yes, AGL has been in a long-term decline since that high, that all-time high. And you're fiddling around with a trend line there. How's that going?
Look, I've got to agree with her. Is this the first time I've agreed with somebody?
Okay.
I don't know, maybe. I don't know.
Yeah, so look, I don't necessarily like your trend line. I think I could do a steeper one than that.
No, I'm just trying at the moment. I'm not sitting on my normal computer and everything else. So,
okay.
Geez, give me a hard time, girl. But it's not this right now. It's not a solid reason to buy the stock because it's crossed above a trend line and closed above it. So right now, I don't think there's enough confluence there yet.
Okay.
To prove that it stopped falling because it has gone down a long, long way.
Well,
hasn't
it has, and the other risk with it too is that it actually went through this low. So the low in March 2008 got taken out. So this then creates a bit of resistance. Now it may just springboard up between $10 or $11. It's possible. But so what? Let people who want to take the highest risk take that risk.
Let them
off the
take
bottom.
it. I don't want it at the moment. So I'm going next at the moment and just putting it on my watch list. But that's our thoughts on AGL. So and well done to everybody who took the time to send us in an email. You really did provide us with some great questions tonight. And I often receive messages from quite a few of our viewers telling me that they just can't wait for next week's show. So, and I also get many who tell me they have questions, however, are too shy to ask or feel that their question is just too dumb for the show. Now, we understand how you might feel. However, we take the view that all questions are important and no question should go unanswered. So rather than just sitting there wondering and hoping somebody else is going to ask the question that you want to know, just ask us, please.
If you've been thinking about trading and you want to learn properly to ensure that you do it the right way, you can call our team. Remember, they've been where you are and they've studied our courses. So they know and they understand more than, I guess, anyone would, and are happy to spend some time to help you to work out the direction that you want to take. There's no obligation and you'll receive helpful information. All you need to do is call 1300 858 272.
Well, that is it for tonight's show. We hope you not only enjoyed what we presented tonight, but got a lot of value from our answers to your questions. So now it's your turn to help us now, and that means you hit the subscribe button to say thank you for the team who put on a big effort to bring you this show each and every week.
Also, remember to put this show into your calendar to join us right here on the Live Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you'd like to have your question answered on the next show, send an email to info@wealthwithin.com.au and type Wealth Within Live in the subject line. Remember, you must email and you must do so before 3 p.m. on the day of the show.
Oh, well, Janine, as always, thank you for joining us, and we hope you have a great week, and we look forward to you joining us next week. But for now, goodbye, good luck, and good trading.
Bye for now.